Hello students, today I'll be teaching you some on amalgamation. I hope you can hear me now. Just type yes in chat. Hello students, today I'll be teaching you some on amalgamation. I hope you can hear me now. Just type yes in chat. Hello students, today I'll be teaching you some. So let us begin. I'll just adjust the screen so that you can see the third adjustment which I have given here. Okay, so let us start. I'll read the sum. A and company and C and company decided to amalgamate on the following terms and conditions on 1st March 2014, when the balance sheets were as follows. Well, students, let me tell you, in case of amalgamation, they will give you balance sheet of two different companies. Okay, what is amalgamation? When two companies come together and form a new company, it's called as amalgamation. Okay, sometimes they will give you the name of new company, or sometimes we just have to write new form. That's it. Okay, now let us see what will be given in the sum. They will provide you balance sheet of two companies or two firms rather. Okay, and adjustments relating to the assets and liabilities which are taken over. Okay, so two firms will be closing down and a new firm will be formed to take over assets and liabilities of old firm. Okay, so the balance sheet which are appearing are of old firms, and you will have to make a new balance sheet of the new firm. Is this clear? Okay. So in this one, what is required from your side? What will be asked? First, you have to calculate purchase consideration. Now, what is purchase consideration? The amount which will be paid by the new company to the owners of old company is called as purchase consideration. Okay, that is deciding price. Then second step is close books of old firm. Now we have to close books of both the firms. Okay, that is A and company and P and company. Okay, so in case of A and company, we will be making realization account, partners capital account, and new firm account. In same fashion, again for C and company, we will make these three accounts again. Okay, so little bit lengthy procedure will be there for closing the books of old firm. And third step, they may ask you to make a new balance sheet or pass journal entry for recording transactions in new company or new firm. Okay, I hope this is clear. Our answer will be in three parts. First, calculate PC. Second, close books of old firm. And third, draw balance sheet of new company. Is this clear, students? Okay, so we'll start with the first part, that is calculation of PC. Okay, now what is PC? PC is purchase consideration. The amount to be paid by new company is the owners of the old company. Clear? Now, on what factors it will depend? See, when you buy something, you will pay the worth of that asset, isn't it? If you buy any company whose assets are worth 10 lakh, you will pay 10 lakhs to the owners of the old firm, isn't it? So the new company will pay for all the assets which it's going to take over. Suppose new company is not going to take over stock, then it will not pay for stock. Likewise, you have to identify all the assets which are taken over by the new firm. And one more important thing, they will provide you value at which these assets are taken over. So while calculating PC, always take new values. Sometimes they may tell you that few assets are taken at new values and remaining at book values. In that case, the remaining assets and liabilities will be recorded at book values. That is the value at which they are appearing in the old balance sheet. Clear? Now, whenever amalgamation sum is there, you draw format like this only. Okay, particulars. Then first company is A and company. Second company C and company. Okay, this will save your time. Okay, and total. Total is required to make new balance sheet. Okay, clear? So now let us see what are the assets which are taken over by new company. Assets taken over by new company. Okay, now let us read the adjustment. In terms of amalgamation, goodwill was valued at rupees 12,000. Now they have given two paragraphs. In first they say the adjustments relate to A and company. Okay, so we'll use these values for A and company. Clear? So first information is goodwill was valued at 12,000. So for A and company, value of goodwill is 12,000. Okay. Then A and company should pay its bank loan. It means in PC, the bank loan will not be taken in case of A and company. What is the amount of bank loan? It is 20,000. Okay. So it will not be taken over by the new company. So in PC that won't come. Okay, clear? Okay. So we can presume that that is taken over by the old partners. Okay. So I'll show you that when we close the books of old company. For now, don't take that in PC. Clear? Third, building was taken to be worth 64,000. So value of building is 64,000. Next, stock to be valued at rupees 26,000. So stock is valued rupees 26,000. Provision for doubtful debts to be created at 5% on debtors. Okay, so first I'll get value of debtors. How much it is? 20,000. And I'll record RDD in liabilities. Okay, so I'll write here less liabilities taken over. Okay, I could have subtracted from the data itself, but you won't be able to understand that. So I'm writing on the opposite side, that is in liabilities. RDD. How much? 5%. So 5% of debtors. What is debtors value? 20,000. So 20% will be 4,000, right? Sorry, 5%. 5% will be 1,000. Okay, that's it for A. Now, what about C and company? What it says? In case of C and company, it says goodwill was valued at rupees 10,000. Okay, so against goodwill in C and company, I'll write 10,000. This sum is very similar to your conversion sum. Calculation of PC, closing books of old firms, the procedure is exactly same. So those who missed conversion sum, okay, once you are done this sum, you can go and watch yesterday's sum, which I did for conversion. Okay, day before yesterday. Okay, I'll send the link of that video again on the group. Okay, you will find it is very similar to this sum only, amalgamation. Okay, next, investment was not taken over by the new firm. It means in case of P and company, although investment appears in the balance sheet, but it is not taken over by the new company. So in PC, it won't come. New company will pay for only those assets which it is taking over. Clear? So any asset which is not taken over by new company, don't take in PC. Clear? Next, stock was valued at 22,000. So in CN company, I'll write stock worth is 22,000. Clear? Then provision for doubtful debts to be created at 5% on debtors. So first I'll write value of debtors of CN company 24,000. Okay, and on that 5%. I'll calculate 5% of 24,000 into 0.05. 1,200. Clear? So whatever information was given in adjustment 1, 2, I have posted it. What adjustment 3 says? It says other assets and liabilities are taken over at book values. So let us see if any other assets are given which were not covered in the adjustments. Now, in case of AN company, building, it was given, so we have already taken. Furniture, it's not taken, so now I'll take it. Furniture. What is the value of furniture? 6,000. Well, right? 6,000. Book value means the value which is appearing in the balance sheet. Next, investment, it is in case of C. We'll have a look later on. Stock already taken, debtors taken, cash bank is I have to take cash. But I will insert one new line here. I need one line here. Okay. All right. Cash and bank. So bank account. Okay. In case 14,000 for AN company. In case of CN company, obviously I'll be taking cash 15,000. What about other assets? Building was not there. Furniture, we have to take furniture. Value of furniture is how much? Rupees 10,000. Okay, so I'll write 10,000 against furniture. Next, investment is not taken over, so I will not write it. Stock already taken, debtors already taken, bank I just recorded. Okay, so all the assets are accounted for. Now let us see the liabilities in PC. Never take capital and reserves. Okay, never take capital and reserves. Take other liabilities, but don't take any liability specifically mentioned that it is not taken. Okay, so now let us see liabilities. A is capital, B is capital. ABR partners in AN company. See, their capital are appearing in A's company column. Okay. In case of CN company, who are the partners? C and D. Okay. Now, next liabilities creditors. Yeah, we have to take creditors at book value because new value is not given. Okay. Values are 10,000 and 15,000. 10,000 and 15,000. I hope this is clear. Okay. Next, bank loan. Regarding bank loan, in case of A company, it was mentioned that A company should pay bank loan. Okay, it means AN company will not, AN company's loan will not be taken over by new company. Okay, but nothing mentioned about CN company. So that loan will come. Okay, so bank loan for C will come. Okay, so be careful while reading. Okay, what is the loan amount of CN company? 25,000. In liabilities, 25,000 will come. In case of CN company. Got it? Okay. So yeah, everything is done. Now we'll add all the assets and subtract liabilities from them. So we will get net amount as P2. The total summation. $142,000. Same formula for P and company. Okay. And I add liabilities of. I'm very bad at using PC. I use summation for liabilities 11,000. Anyway, I do it for C and company. Okay. So total liabilities. Now, assets minus liabilities will give me PC. Okay. So PC is for A and company, it will be 1,40,000 minus 11,000. Okay. For C and company, it is 39,800. I hope this is clear. Okay. Now I have drawn one more column, that is for total. Okay. So I'll just add figures of A and company for goodwill and same formula for all the other rows. Okay. This will give me overall figures of assets and liabilities. Okay, students. So in amalgamation sum, do follow this format for calculating PC. Even in conversion, you can follow same format. Okay, you don't have total because only one company will be there. Okay, so we are done with the PC. I can increase font size. It's too small. Okay, it should be legible now. Okay, done. So PC is done. Sometimes we'll find one sum is there just to calculate PC. Okay, it will be for 10 marks. Calculate PC. Okay, you should be able to calculate PC. Okay. Okay. Now, one that is first part is done. Calculate PC. Then second, close books of old firms. Okay, close books of old firms. So let us close books of these two companies. Okay, I'll do it for first company, A and company. Okay. Then I'll do it for P and company. I'll do it for A and company first, A and company. Okay. Same way we have to close it for B and company. Now, while closing books, which accounts we need to have? Well, we need to have realization account, partners capital account, and a new firm account. Okay. I'll make a new firm account here only. New firm account. Very simple procedure. Students, by calculating PC, you will get at least 7 marks. 5 to 7 marks minimum you will get. Okay. So this is easiest part. Sometimes they may ask one sum exclusively to calculate PC. It will be having 10 marks. Okay. And it's very simple. Whatever values are given, you have to take. If they say that take other assets and liabilities at book values, then take the remaining asset liabilities. Which liabilities you don't have to take? Capital and reserves. Okay, don't take over these liabilities and assets. Okay. Okay. Now we are in the second phase, that is closing books of old firm. Okay, I'll show you how to close books of A and company first. Clear? Now, which three accounts we need to have? First, realization account, then new partners capital account, and then new firm. But since format of realization and new firm requires only one column of amount, I am making it together. And partners capital, we need two columns because two partners are there. Okay, that's A and B. Then on the credit side, A and B. Okay, so I have drawn it below these two accounts. Okay, that's partners capital. Posting will be very simple. Okay, just pay attention. Those who attended this day before yesterday's lecture of conversion, they'll find this very easy. Even other students will find this easy because it is just similar to your dissolution of partnership form, which you studied in SYBC. Okay, let us start. Okay, we start from the left hand side, that is liability side. See, whatever belongs to partners will go to partners capital account. Okay, I'll repeat. On liability side, whatever belongs to partners will go to partners capital. Now we are closing A and company. So only limit yourself to A and company column. Don't look at the other column, C and D. Okay. So now in A and company, we have A's capital and B's capital. Okay. Liability side means credit side. So in capital account, credit side, write by balance brought down, or just write opening balance. That's enough. How much is the balance? 6,000 and 30,000. Okay. 6,000 and 30,000. Clear? Okay. Then below that CP is given, but that will be in other books. Okay. Then creditors. Creditors doesn't belong to partners. So all other liabilities will be recorded in realization account. Where do we record? Realization account. Since liability indicates credit side, write on the credit side. What you'll write? By creditors 10,000 and by bank loan. By bank loan. Remember, whether any liability or asset is taken over by new company or not, it will come here for sure. Okay, so 20,000 will come here. Even though it is not taken over by new company, still you have to post them either in capital account, if it is a capital and reserves, and other liabilities in a realization account on the credit side. Is this clear? In PC we take only items which are taken over by new firm. But in realization account and partners capital account, we take all the items which belongs to respective accounts. Okay, clear? Okay. So we are done with the credit side. Now look at the asset side of A and company. Since assets have debit balance, we'll record on the debit side. We can give a common heading to sundry assets and record one by one all the assets. Okay. That can be done in case of liabilities. In case of building, always remember, while closing books of old firms, only take old values, never look at the adjustments. While calculating PC, we took all the new values wherever possible. And for remaining, we took book values. But in case of closing of books of account of old firms, that is when we are making realization account, partners capital account, new firm account, always stick to old values, book values. Okay. Okay. So sundry assets includes building. What is the value? 50,000. Furniture. Furniture is worth 6,000. Next investment is in C company. Don't take care. Stock 30,000. In debtors 20,000. Tell me, shall we take RDD? Think. No, it is an adjustment, isn't it? I told you. While closing books, take only old values. Okay? Done. So we are done with the posting of all the items of A and company. This part is very simple, but takes time. Not at all difficult. Okay? Simply post liability side on the credit side. If it belongs to partners, post in capital account. Suppose there had been general reserve, then would have put it in partners capital account by general reserve, and by using PSR, we would have distributed between A and B. Clear? Likewise. Okay. Okay. Yeah. So we are done with the posting part of old form. Now, once posting is done, we have to pass one entry. That is, we are selling company to new firm. We are selling company to new firm. We are selling all the assets to new firm. Clear? Okay. So write on the credit side, buy new firm. Okay. At what price we sold first company, in company? 1,31,000, right? 1,31,000. Okay. So in new form, give second effect to realization. Use PC value 1,31,000. Is this clear? So we sold assets and liabilities, but one liability is not taken out by the new company, right? Which is that bank loan. So what will happen to bank loan? Even we don't have any sufficient cash. So what we'll do? We'll transfer this liability to partners. Okay. See, loan is appearing on the credit side. To transfer it to partners, so it will be on the debit side. Right, to partners capital account. Okay. If nothing mentioned, take the same value, 20,000. Okay. And it will be transferred to partners credit side by realization account. Okay. Use PSR to distribute the value. Achha, is there any PSR given to us? Not given. Okay. In case profit sharing ratio is not given, presume it to be equal. Okay. So I presume PSR to be equal. So it will be how much? Bank loan was how much? 20,000. So 10,000 each. I have edited the unnecessary part in this sum. So might be missed on that ratio. Okay. So even in the sum, if PSR is not given, always presume it to be equal. Okay. Okay. So we are done with all the assets and liabilities. Clear, students? This is how you have to post all the entries and record PC. Okay. Now we'll close the realization account. We'll check which side is heavier. Was there any other adjustment we missed? No. We put everything here. Now let us see the total. The total of debit side first. Okay, 140, and credit side. I'll just check. Okay, credit side is heavier. So I'll take credit side below 1,51,000. I'll write here 1,51,000. Okay, from that I'll subtract 1,40,000. How much profit I'll have? 11,000, right? 11,000. Okay. Totally 151. So this will be transferred to partners capital. This will be distributed between the partners. Okay. So I'll write to partners capital account. Value is 11,000. So we'll distribute equally by realization account. Okay. How much? 5,500. 5,500. Is this clear, students? Now we'll close this account. Okay, and transfer the balance to new firm account. Let us check the totals of partners capital. And use summation formula. Let me check the total once again. Loans 10, 20, 30, 150. Okay. 42 and 20. Returns total piece is how much? Wait, building 50, 60. 30, 20, and taking cash at bank for 20,000. 11,000. Okay, 630. I will missing out some items. I'll check posting again. Capital 6,000, 30,000. Okay, I think there is a mistake in A's liability side. Can you check? Take the total of A column, A and companies column. It may not add up to 1,20,000. See, from bottom, if we start 20,000 plus 10, 30, 30, 30, 60. Okay, A's capital is not 6,000, it is 60,000. There is some mistake, printing mistake in the sum. Original question, you can see that it is appearing 6, but if you add up, it won't be 120. So if we take 60,000, then only it is matching. Okay, clear students? There was mistake in the sum. Okay. Okay. Let's see if any other mistake is there. Check. Okay. Let us see if it is tallying or no. So now we'll close this account. Partners capital account. So to balance, we have 75,500 and 45,500. Okay. That will be transferred to new forms account by A's capital 75,500 and by B's capital 45,500. Let us see what is the total of these two. 121,000. Okay. Check sum. I think one more mistake must be there in their sum. Okay, because this should tally. Okay. Check asset side also. Wait, let me check. I will check the see. I directly took the sum. I didn't check the sum before beginning with the solution. 56,000 plus 30, 40, 15, 64,000. 64,000. 120. Asset side is okay. Liability side is also okay. Hmm. 20, 30, 30, 60 and 60, 120. Okay, now balance sheet is okay. Let us check the posting. Creditors 10,000, bank loan 20, asset side 50, then 6, 50 and 6, 80, 20 and 14. Okay, then partners loan, transfer partners capital, then profit transferred. Okay, 75 and 40, 20. Okay, just a minute. 142 is correct. RDD 11, 131. We'll move on with the other form. Okay, I'll close the books of other forms. Something might click that time. Okay. We'll move on with the next sum, or rather, next part. I'll make it here on this side. Species. I'll shift this part of A and company aside so that we can solve with the other form. Okay, and take it here. Okay. It's on C and company now. Okay. And let's remove the values. Oh. So again, we'll start with the C and company. We'll come to know there might be missing out some item. Okay. So again, we'll start posting. Now here partners are C and D. C and D. C and D. Okay. We'll begin with the posting. And just increase the size. This one. Question. So let us start posting. As I told you, we have to use book values. Okay. So first is furniture. Furniture building is not there. So I'll post furniture 10,000. Then investments. I'll write investment here in assets. Value how much? Investment 10,000. Then stock is 26,000. Then debtors 24,000. State bank 15,000. Okay. Liabilities will post capital balance. It's 33,000 and 22,000. 33,000 and 22,000. Then creditors 15,000. And bank loan 25,000. Okay. Now we have posted all the assets as well as liabilities. Let me count the items. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. And let me first check the total of this balance sheet. Sometimes in this sum they have giving some wrong amounts. I'll check total first. Then we'll go ahead. 95, liability side is correct. Asset side 20, 30, 40, 50, 70, 80, 90, 90. Okay, both are correct. So I have posted all the items of balance sheet. Okay, now in this case, investment were not taken over by the new firm. So investments are appearing on the debit side. So it will be transferred to partners capital on the credit side by partners capital. Okay, same value we will take it. Investment value is 10,000. Okay, on the debit side of partners, it will be recorded to as drawings to realization account. 10,000, so we'll distribute equally 5,000 each. Okay, we give second effect of this. Now we'll sell the company to new firm. We'll use 39,800. So we'll record PC at 39,800. 39,800. Okay. Second effect will be in new firm to realization 39,800. Okay. So let us see if any other adjustment is there. Investment stock. Yeah, that is done. Provision for already done. Okay. Now we'll close this account. First we'll close the realization account. Let us see which side is heavier. Total of credit is 89,800. Total of debit side is 85,000. Okay. Okay. So let us see what is the profit. Same way. And let's same figure on the debit side and find out the difference. 89,800 minus 85,000. So 4,800 is the difference that will be transferred to partners capital account by way of realization. And we'll distribute it equally. 2,400 each. 2,400. And we'll close this account. Okay. And see what is the difference. So total is 35,400 on the credit side. From that, I'll subtract that 5,000 rupees of investment. Okay. So we get balance of 30,400. And on this side, 24,400 minus 5,000. 49,400. Here, 39,800. Let us post it. Now this will become C and D. C and D. Is capital 30,400 and this capital 19,400, which adds up to 49,800. Oh, this time it is 10,000 more, and there we got 10,000 less. I think we have made some mistake in writing the amount somewhere. Wait. Yeah, we have exchange some asset और liability. किसी का तो वैल्यू हमने 10,000 इधर का उधर कर दिया. Just find it out, students. While recording, now let us check with this C and company. C and company का वापस एक बार देख लेते हैं हम लोग. हमारा 10,000 ये बैलेंस शीट का वो बैलेंस शीट में चला गया है. ओके, लेट अस स्टार्ट पोस्टिंग अगेन. सी का कर लेते हैं हम लोग वापस एक बार. इन्वेस्टमेंट 10,000 करेक्ट है. फर्नीचर, ओ इन्वेस्टमेंट का वर्थ 20,000 है, हमने 10,000 लिखा. ओके, इट इज 20,000. ओके, यहाँ पर मिस्टेक मिला हम लोग को. इन्वेस्टमेंट वर्थ वाज 20,000, बाय मिस्टेक we wrote as 10,000. So now debit side is heavier. Okay, I'll just correct it. 95,000 is the total of debit side, and credit side total is how much? 89,800. Okay, so this time there will be a loss. Okay, so we'll write by partners capital. Okay, the difference will be 95,000 minus 89,800. So loss is 5,200. Okay, so it will come on the debit side, not credit side. So I'll just reverse this one to realization. How much will be the value? 5,200 divided by 2, 2,600, right? 2,600. Here also 2,600. Now let us see what is the balance now. 33,000 minus 5,000 minus 2,600. Okay, same way for B also. Okay, now let us change the figures. 25,400 and 14,400. Yeah, now it is tallying. Okay, students. I think even in earlier books of A and company, we must have missed out, or we must have made some mistake in posting the items. I will have a look again at that. 39,800. Okay. Okay, so this one tallied. So let us again check the values of A and company. I'll again shift this one to right hand side and we take for the other books. Okay, I'll just shift this aside and let us take the A and company's books again. We will identify where we posted a wrong amount. We'll find it, don't worry. Not that difficult. Okay, so let us check it again, all the values. Can we do it? Okay, we'll start from the liabilities. Let us do it. Okay, we can see capital 60,000 done and 30,000 done. These two done. Then creditors 10,000, correct. Bank loan 20,000, correct. Okay, liability side done. Asset side, building 50,000, then 6,000, 30,000, 20,000 and 14,000. Okay, all the assets and liabilities posted correct. Now let us see PC. Let me check the value of PC if it is correct or wrong. I'll check total again. 142,000 correct. And liability side, liabilities taken over are RDD is 1,000 and creditors is taken over 10,000. Yeah, correct. Bank loan was 20,000, not taken over. So we distributed between the partners capital. So partners capital by realization 10,000 each. 10,000 each, 10, 10. Okay. So now we close the account. We'll see which side is here. 10, 20, and 131. So total is 1. Oh, see, here is a mistake. Total is 161 and we have written it 151. Okay, guys, we found the difference. Check here. Total is 161. I think while taking the total, I took from 20 onwards. Therefore, that 10,000 difference is. Check the total. 10 plus 20, 30 plus 130, 161 it should be. Don't make such small mistakes since I'm using this laptop. So that mistake must have occurred. Otherwise, you won't go wrong. Okay. So 161 minus. Let me take total once again of debit side. It is 140. So this will be 21,000. Partners capital account will be 21,000 difference. Okay, not 11,000. Okay, so we'll distribute among the partners 21,000. So it will be 10,500 each. 10,500. 10,500. Okay, so now the totals will be, and check total again, 8,500 and here 55, correct. So new total will be 8,500 and here 5,500. Okay, so now new balance to be carried forward will be 80,500 for A and 5,500 for B. Okay, so now new total is, yes, 131. It's tallying. See, students, never get afraid even if your sum is not tallying. Okay, as soon as you have time, just start checking it again. Okay. Okay, so we are done with the closing of both the books of A and Company and C and Company. Okay, be a fighter in life. Okay, don't be afraid. Even if sum is not telling, just look for the mistake. You will find, definitely you will find. Okay. Now we will make new balance sheet, right? I told you that I'll show you how to make new balance sheet. Okay, and I'll also show you how to pass journal entry for a recording in new form. Okay, what I'll do, I'll just shift this accounts on the extreme right so that we have space for balance sheet, right? I'll just shift this part. Yeah, this much part it is okay. Okay, now we'll make new balance sheet. Some students had a doubt that they'll have to make vertical statement of balance sheet. So don't worry, we just have to make the old format. Okay, that is liabilities amount, assets amount. Liabilities amount, assets amount. Okay. Now, see, I had made that total column. You remember this one? I'll just make it bold. Okay. In amalgamation, just use this. That's it. Okay. So I write all the assets here on the asset side. Okay. And take the values from the total column. Okay. So simple to make a balance sheet. It will take 5 minutes. You just have to copy paste values, nothing else. Oh, I have to copy the values. I will do it. Copy values. Yeah, got it. Okay, same way, liability side, you can write. See, RDD can show on the opposite side also, like I'm doing here. Okay, or else you can just deduct from data. Okay, take total column. Control copy and paste the values also. Paste values. Yeah, done. Now, what about capitals? We have to use values from the new firm account. Look here. We had made this new firm account, right? There we had capital of A and B. So we can copy it here. A is capital and B is capital. I have to just manually write the values. Okay. I have used formula there. So 80,500 for A, 50,500 for B. So right there, capital A, B, C, and D. Okay, A and B already took. I'll take it for C and D. 25,400 and 14,400. 25,400 and 14,400. That's it. Okay, you're done with the balance sheet. So simple, isn't it? Okay, whatever is there in the PC, okay, will be there in the new balance sheet. Yeah. So I used all the totals. I wrote all the totals of assets, then liabilities, and I took capital from new firm account. See, in new firm, we have capitals of both the partners. And these values are after adjusting all the values. Okay, clear? So now we'll see if our balance sheet is tallying. So if you get this tallied, you will get full marks. Okay, students? Let us take total. Total is 223,000. Just sum it up. Same way for the other side also. Yeah, it's tallying. Okay. That's it, students. I hope you have understood everything. And just to give a recap again. Okay. Whenever a sum is given to you for amalgamation. But let me tell you, if you find some other sum against this, okay, so don't go for amalgamation. It is very time consuming. You go for, suppose you get final count sum or piecemeal distribution. Okay, then you go for those sums because this is lengthy sum. Okay, clear? So first, what we did, see, as I told you, we have to make three things in amalgamation sum: PC, close books of old firm, and open book of new company. Okay. In case of amalgamation, they will not ask you to pass journal entries. Only in case of conversion, they may ask you. That I'll show you now. In case of conversion, if it is amalgamation and they ask you to write journal entry, then very simple. Okay. Whatever we just did for balance sheet, same thing you have to do for journal entry. First, record all the assets like goodwill account debit. Okay. Building account debit. Okay. Likewise, you'll write all the assets and total amount. Wait, I'll do it. I'll do it here. All these accounts to debit. Okay. Then we'll write one by one all the credit items. Okay. And obviously, since balance sheet is telling your journal entry will also to RDD, to creditors, to bank loan, to A's capital, B's capital, C's capital, and D's capital. Okay. Clear? See, in case of conversion, your entry will be having like liquidator of A and company, liquidator of B and company. But here, business is being continued. Okay, only a new firm is formed. there won't be any liquidator of old companies here. Okay, so don't pass entry for liquidators now in amalgamation. Clear? Simply all assets debit to liabilities and to capitals. Okay, clear? I hope you have understood this. Mostly in amalgamation, they won't ask you to pass it. Okay. So that's it, students. I hope you understood. Now I'll go to yesterday's sum. It is conversion. Let me find the sheet for that. Yeah, here. Yesterday we solved this conversion sum. Okay. You remember? For those who are not there, I suggest first you go for that video, you watch it, then come back to this part of video. Okay. So you will understand. And I think you'll be able to understand even now because amalgamation was similar to your conversion only. So I think you will be able to understand. So what I suggest you be here. Okay, I'll pass the entries. See if you could understand them. Okay, shall we start? Okay. So this is yesterday's sum of conversion. In this sum, what we did, what was given in the question, balance sheet was given, and they told us that Ayodhya Limited, a new company was formed to take over the partnership. This partnership is dissolved, okay, and a new company, limited company is formed. Okay, so we calculated PC here. You can see PC calculation. Okay, we took all the assets, new values, and minus liabilities. We got PC 4,36,400. Okay? And it was given that the PC will be discharged, means it will be settled like this. Equity shares will be given worth 3 lakhs, preference shares worth 1,20,000, and cash worth 16,400. This way, the whole PC was to be paid by the new company to the old firm. Clear? And as I told you, from this PC only we made this new balance sheet. Okay, I'll just add a format to this so it will be looking proper. I'll just add a format to this one. Yeah, okay. Even to calculation of PC, I better suggest you use a good format. Yeah, that's it. Okay. So same thing as we did in amalgamation, same thing is there. From PC, you can make a new balance sheet. Clear? Okay. Now, how to pass entries for this? Well, students, we need to pass 3 journal entries. You have to pass 3 journal entries. I'll just move this up on the side. Okay. Now, first journal entry will be that we are going to buy new business. Business from whom? The liquidator of old firm. Okay. So entry will be, first entry will be always business purchase account debit, okay, to liquidator of old firm. Okay. Entries are fixed, they won't change it. Okay. So, and this entry will be with the purchase amount, purchase price amount, PC amount. Clear? I'll put the values 436, 400, right? This size with 4,36,400. 436, 400. Then first entry. Then second entry. Okay, all assets to all liabilities. Okay, I'll do that. Second entry, this was first. Second entry, just we passed entry for assets taken over and liabilities taken over in amalgamation. So same entry. We'll write all the assets now here. Okay. So in PC, whatever assets are there, you record it here. Okay. So goodwill account, building account, machinery account, debtors account, stock account, bill receivable account, and bank account. Okay, all accounts will be dependent with the values. You can see this is the size so that we don't make mistake here. Okay, so all the assets account debit. I'll copy paste the values. So copy, paste it here. Only one data had a value formula 49,400. Okay, two liabilities one by one. It is sundry creditors, 65,000. To bills payable, 53,000. Okay. To business purchase. Remember these entries, huh? Business purchase. Business purchase sale value, that of PC, 436, 400. Clear, students? So two entries are done. Okay. And now in third entry, we use the discharge of PC. Now we'll pay that liquidator. Okay. So I'll write liquidator of old firm. How much we have to pay him? 436, 400, isn't it? 436, 400. To whatever we gave it to him. We gave equity shares, okay, worth 3 lakhs. I'll write to equity shares. I'll explain again. Huh? First, let me write. I'll explain. To equity shares, how much we are giving? 3 lakhs. Then 1,20,000 for preference shares and 16,400 for cash grant. Okay. So two preference shares and two cash / bank. Okay, because it may go in negative now, so we may have to use it. Clear? Is this clear, students? I'll repeat. See, these three entries are just similar to what we asked in amalgamation. Okay, I'll tell you how. Just let me shift these two figures here on the left hand side so there is no confusion. Now, look, in first entry, business purchase was debit, and in second entry, at the end, we have credited. So it gets cancelled out against each other. Clear? Then liquidator, here it was credit in first entry, and when we paid, it gets settled. Okay, so what is the net entry? Now, which are the items left? All the assets debit. Okay, two creditors, two bills payable, and two all the items which we gave to the old company, isn't it? So same entry, but we have made three entries out of that one common entry which we passed in amalgamation. I hope this is clear. First entry is for buying the business, new company. These entries are in the books of new company. All right, in books of new company. Okay, what new company says? I have bought business. So we say business purchase account debit to who is the giver of that business? Liquidator. He is appointed by the court. So business is bought from that liquidator, and the value of business is PC amount. Okay, so first entry business purchase account debit to liquidator of old firm. Clear? Then we'll record all the assets and liabilities which are there in PC calculation. All assets to all liabilities, and difference is PC amount. So write to business purchase. So even this entry will tally. Now that liquidator which was in first entry from whom we bought business will settle him by giving equity shares, preference shares, and cash bank. So liquidator to equity shares, to preference shares, to cash bank. Is this clear, student? These three entries. Now see in yesterday's balance sheet, our bank showed overdraft. Can you see it here? 9,400. Okay. So some students were confused how we got this. Now, if you look at these entries, journal entries, 3 entries, you will get the answer. Okay. Look in second entry, we got bank balance as a part of asset. How much? 7,000. And we have to pay to liquidators 16,400. If we find out the difference, that we had 7,000, but we paid how much? 16,400 to liquidator. So we are in negative. How much? 9,400. Therefore, it is showing as bank OD on the liability side. Is this clear, students? I hope this is clear. And that's it, students, for the day today. Okay. So I'll stop the lecture now. Okay.